All right, guys. So earlier I had talked about understanding smart money manipulation, neutralization, and mitigation with 3 basic steps. Okay, something I call the SP, which is your stop purge, plus BOS, which is your break of structure, and your RUTO, which is your return to order block. Okay, that is like the textbook approach to SMC confirmation trades. Okay, that's how we get to know that we have smart money footprint on a particular asset or a particular pair we're trading, and then we can follow those. And I explained on the video before this one, for an uptrend, that we are most likely to see something like this. Okay, and then we have okay, and then this and this back to the downside. Okay, so this is our basic, sorry, let me get this up. Our basic neutralization, manipulation and neutralization that indicates SMC footprint. So this would be our stop purge, right? Because it was a previous high that was meant to induce traders into coming into the market at that time. And then this would be our break of structure, okay? While this here would actually serve as our supply block that was actually mitigated to see further move to the downside. Okay, so the direct opposite of this, like I explained in the other video, are for buy patterns, while this is a confirmation entry for a sell pattern. Now, what makes this very authentic is that it must be reacting off a higher time frame zone, either a higher time frame supply level or demand level, or a higher time frame supply block or sponsorship candle or funded candle, whatever you choose to call it. But what makes it more authentic or convincing to take is actually when it happens off a higher time frame zone. Okay, so if I see my order block somewhere around here, okay, let's assume I had marked a zone somewhere around here, all of this area as my daily order block, daily supply block, okay, and then price mitigates that block. I drop down to my smaller time frame, probably my H1 or M30, because I'm working off the daily, and I begin to see this kind of movement. Then I'm certain that I have some kind of Wyckofian approach to the market, or I'm looking out to take in classical SMC manipulation and neutralization, and then leverage off my RUTO. Okay, so I'll just try to explain that on the charts. It's quite simple. Forget the too many grammar. It is the thought process behind the grammar you should be concerned about, okay? So seeing how these things are being expressed on the charts and what they truly do or represent. When you can get that, then it becomes quite easy to understand the whole of the jargons that are attached to trading SMC. Okay, so let's work on getting the thought process pretty much first, and then we'll move on to other things. Okay, so this was a trade I analyzed early this week, I think a few days ago, for Euro CHF, okay, Euro versus the Swiss francs, and then I'll be using this here, and then using another example that is actually happening on step index. Okay, I remember I had sent you step index to the group, and then I'll try to break them down using this here for a currency perspective, and then using what I have on a step index for a synthetic index perspective. Okay, so like I explained, let me see if I can have this in line charts and it won't mess up my stuff. Okay, you can pretty much give me what I'm looking for. I have to come back to candles. All right, good. So this here was priced. Let's trace it from. All right, great. So basically, anyone who sees this will say we have been consolidating. But like I said, the only time I would rather not trade is not when price is consolidating on a higher time frame. It's when I have choppy markets on a lower time frame. Because yes, we are moving sideways, but there are lots of movements happening inside of this sideways move. Okay, when I teach you the concept of transfer of funds, you see exactly what happened here. and why this was a great setup, okay? So we had funds transferred from this IFC to this IFC, okay? When we had this liquidity here, yeah, you understand? The same process, okay, very nice. The same process happened here. So we have liquidity, right, as our stopwatch. Don't forget SP, an area that just serves as common inducement. An area that serves as common inducement just to try to let buyers or sellers engage in the market when it is not yet time. The sole purpose is to tap into the liquidity that will create above that level and then fuel price movement to the downside. Okay, so we had that. The whole, don't forget, the whole of this area is an order block. Okay, if I was marking this up the daily time frame, the whole of this zone is an order block. Okay, the whole of what I have here is an order block. But then because of refinement, I'm working with this on the 30 minutes. So this particular candle was my last bullish candle that sponsored a bearish run, which makes this my supply candle, okay, my sponsored candle for a supply move. Okay, so I'll be expecting price to react off that level. Okay, so we had, when I had this liquidity form, it was extra confidence that price is going to mitigate this level, because when I'll teach you guys choosing the right, how to choose the right supply and demand blocks or the right order blocks, I'll make emphasis on which blocks has the most potential and which blocks should be considered as a potential order block for a reversal or a continuation, depending on the trend of the market. Okay, so we had price take out our stop code, right? And then tap into this level and began to sell. Now, it is fine that I can set a pending limit here and sell from this point, which it's no problem with that, okay? But if I fail to do that and I want to get a re-entry, this automatically becomes my stopwatch, okay? This BOS here, because I'm actually working with structure. The structure, when I'm trying to choose my BOS, I like to be precise on structure, okay? We've had here higher highs, higher low, okay? So this was still within the range, so I will not call this a higher high. So I'll transfer all of that move to this guy here, being the next higher high, right? And this here being the next higher low, because it is higher than the previous low, okay? Now what continues is this guy, my higher high. So if I should have a new higher low, then I will be certainly expecting price to continue bullish, but that failed to hold. Instead, what happened, we took out the previous higher low, okay, giving us a nice break of structure. Nice, okay? So automatically I knew I was envisaging a change of trend. So I began to look out for which made this zone, okay, let me just put this out, which made this zone quite interesting for me. So I began to look out for, since I have my, what is it called? Stopwatch, my SP, and I have my break of structure. The next thing I will begin to look out for is to return to where? Order block. Okay, this was my premium. This was in my premium area because it was above my 50% level, and then I had this liquidity here that price had to grab into. Okay, and I had some imbalances of fair value gaps around this area, which actually gave confidence to this particular point. Okay, so what did I do? Now, again, I engaged from this point. Let me see if I can shrink this a bit. So this was actually the first entry. Okay, this was the first entry of this area, right? And then price sold beautifully well to the downside. This was a 1 to 9. This trade was a 1 to 9. But then let's assume I had missed this entry, and then I want to engage in price or engage in Euro CHF again, but I had missed my initial entry, which was the RTO, after I had my what? Okay. After I had my stopwatch, my break of structure, showing me intents that we could be going bearish, and then a continuation upward to mitigating my RTO, which is my order block. Okay. Now, what else will I be looking for to take a re-entry on this trade? The exact same process. The exact same process, okay? Automatically, this previous high here, old high that was violated, becomes my RTO. Why? Because price broke this high only to go to mitigate a new or a previous block, which actually gives me another transfer of funds, okay? So the funds, let's trace the story. the funds that were actually sponsoring this sell move were transferred to this guy here after the mitigation occurred. So as the mitigation occurred, this guy only moved here to pick up all of the funds that were inside of here, or the orders that were inside of here. So transfer of funds from this guy to make this guy the new supply level, okay? And then we continue bearish. Now this guy has to transfer funds to the next guy to continue the move, okay? So we had this move down, the same process, liquidity grab to the upside, and then a buy side liquidity taken, and then imbalances closed and filled, and then this guy transfers liquidity to where? To this guy, okay? And now it was this guy, right? This first guy here, let me blind this. Okay, it was this first guy here, but then this guy has already transferred the liquidity to this guy, right? And then when I went to my lower time frame, I discovered that this guy who is now carrying the funds has been properly mitigated, and there was no need to come up here, which left us with this guy who had a what? Imbalance or a fair value gap. Okay, imbalance or a fair value gap before the order block, which makes it a valid block that could be retested or reacted from, because I had an imbalance or a fair value gap before the block, and the block is a block that had just mitigated previous block that had funds, that was a sponsorship candle. Okay, the whole of this bullish candle here before bearish run is a sponsorship candle. Okay, that's the order block. So if I choose to put this in a box, I would actually be boxing out this whole thing. Let's change the color to yellow. Okay, great. So this here was actually the transfer of funds. So it has happened pretty much clearer in this zone here on the smaller time frame. But this here was another mitigation and then transferring funds to this block. What did I do? The exact same process. Stop purge, which is the breaking of a high, coming back to retest this previous block, right? And then a break of structure. A break of structure. What is my current structure I have here in price? I have this high, this low, this high, this low, this high, this low here as a minor BMS, okay? Minor BMS. I could possibly use that, but then I was concerned about the major break of structure of the trend. Okay, this high, this low, this, and then the break of structure that I wanted. Okay, so what was I looking out for? I was looking out for price to come back into my premium level before I take a sell. The premium level is anywhere above your 50% Fibonacci, and your discount level is anywhere below your 50% Fibonacci. Discount connotes cheaper prices, cheaper rates, lower prices. Premium connotes higher rates, higher prices. You buy a good when it is cheap and you sell it when the price is high. That is simple supply and demand. Okay, we buy goods or buy products where they're more cheaper, and then we sell them when they are higher, so we can actually make profits. Or you buy goods cheaper and you deliberately sell them higher, so you can make profits. So we are looking at for sell positions when we are approaching higher prices. Okay, actually my premium zone. Okay, so that was the movement I had here, and then I went back. Price actually went back into this region. We tested this level, right? Pretty much we tested this level and what continued to the downside. Continued to the downside. Okay, so this became, let me take this out. So this became my stop purge plus BMS or BOS plus RTO, which led to continuation. So I can call this now manipulation because it had taken out previous sellers that thought the trend was ready from here. Bearish close of candle, heavy sell momentum, whatever you choose to call it that happened here. A lot more, it actually connoted a sell. Okay, it connoted a sell, and then we are selling. Now we are not just taking this stopwatch from anywhere. It has to be respecting a zone. So this was a valid zone. Some people would have tried to take a stopwatch from here. Stopwatch from here, and expecting price to come back to mitigate this level here as our supply, which never happened, okay? Why? Because you have to be taking it. When I explain change of character, I said it is smaller time frame break of structure after it had retested a higher time frame supply or demand level. A change of a character or change of character is just lower time frame break of structure due to its retesting or reacting off a higher time frame supply or demand. Okay, so it has to be off a particular supply or demand. So everything here is liquidity. Okay, so I knew I had a stopwatch here or liquidity inducement trap here because I had this equal lows here, and then sellers will be, retail sellers or dump money sellers will be looking to take sales from that point, which actually held, okay, after it had taken them out, okay, because if I trace this line here, you see that it took them out on a few pips, okay, still grabbed on this liquidity here and then sold. But then I still have imbalances here and an unmitigated block here. So I was not interested in all of these sales till price comes back to my point of interest, which was this zone. Okay, and then we saw price deliver nicely to the downside. Okay, and then I was already targeting this low. Okay, this low was just my target to be taken out to continue further trends. Okay, so this played out very well on a 1 to 9 stop loss on 10 pips. Okay, because I wasn't using the exact candle, I was working with a 30-minute zone. Okay, and then this played out 1 to 8 stop loss on 9 pips, take profit on 79 pips, while this had take profit on 101 pips. Okay, so this was a 1 to 9 and this was a 1 to 8. Okay, very pretty stuff, repeating the same process over and on. Okay, simply waiting for price to do what it does best and then taking your entries. Now let's look at synthetic index. Great. Okay, now I had sent this picture to the group stating that price was going to react off this level, okay, and then continue to go bearish. Okay, probably mitigate. We are ready for a bullish one here. So probably mitigate a block inside of here. Then I'll look forward to seeing confirmations that would enhance my bullish one. Now, why did I want price? What was the reaction I was looking for? Why did I not enter on this level? Okay, why did I not enter off this level? Let's go to a higher time frame. Okay, I will still go back there and then look at the higher time frame for Euro CHF. But let's look at this. Let's look at this. All right, guys. So now I told you it is smaller time frame or lower time frame break of structure reacting off a higher time frame zone. So this was my higher time frame zone that I had as point of interest. Okay. Now in the zone, we had this first inducement leg, which captured a few sellers and convinced them it was time to sell. Okay. So sellers had gone in on this point. It was almost misleading for me at first, but then if you look properly, you see, okay, let me make it black. Let me make it black. Okay, I had a black line here, which was actually the actual M15 candle. I wanted price to retest because I had a fair value gap before the candle. I will show you that in a bit. Okay, I had a fair value gap before the candle. So I understood that what was actually happening here was a liquidity inducement leg to only create a stopwatch. Okay, so what happened here was liquidity inducement leg to create a stopwatch. The price will eventually take out, grabbing all of that liquidity, then mitigate the block I have marked out, use it as fuel, and then sell, continue to the downside. Okay, so I was not online to take this trade. I didn't have pending orders, but I'll just break this down for you guys. So let's see the actual candle I had in mind. Let's see the actual candle I had in mind, expecting this move from. Let's see the actual candle. So move back to me, move back to me. All right. Now, if you have been following my classes like you should, you'll understand why I have this candle here. The last bullish candle before a bearish run. Why didn't I use this particular bullish candle that sponsored the whole run? Because I had price. Look at this week here. When price broke below the candle, okay, price actually went back in to mitigate this block. So we had a fine mitigation of this block. Let me color it red. Okay, so you can see this week here, price went back up to mitigate this block. Okay, but this guy was left, and then we had this imbalance here. We had this imbalance here, and then we had some minor imbalances. Okay, not there, not there. This was a major imbalance, but then this block just caused attraction was attractive to me. So number one, I had the whole zone mapped out, but I was still precise about this block. That is why the first move that happened was almost misleading for me. It was almost misleading for me because it presented my minor stopwatch here. You can see probably on my screen. It presented this stopwatch, okay? And then I saw price broke above to grab liquidity, and it continued bearish to give me a break of structure for this side, okay? And then also creating this minor liquidity that made me feel like, okay, this was going to be the zone to attract price, and then we see further price movements, okay? However, when we went there, I was keen to watching on reaction, and I did not get that reaction. So I was looking forward to seeing normal retail trading reaction because this was a vital zone already. At least I would have seen price not break above this level. I would have seen a bearish close without breaking above this level, but that failed to happen. That failed to happen, okay? So I saw price break out of this level. I knew this zone was messed up already and I could not work with that zone. So I stayed calm to see what price action was going to give me next, okay? And what did price do this time around? It now actually gave me what I was looking for, which is this level being taken out as my new stopwatch, claiming to be that, which clearly showed me that this whole leg was an inducement leg. So we took out this whole inducement, okay, with this bullish move upward, and then took out this previous high, coming back in. And then if you look closely, it mitigated my actual block that I had marked out on the M15 far back when I went left to show you guys. Kissed into the level, and you can see the reaction immediately. Price kissed the level, which was extra amazing. Okay, so we had this kiss into the level, and then we have seen lower price since then. Okay, now why do I have? I'm looking for. So I now have my stopwatch or my BM or my stop hunt, whatever you choose to call it, liquidity grab at this point, and I have my break of actual market structure. Okay, because if you trace the structure, we've had higher highs, higher lows, higher highs, higher lows, and so on and so forth. And at this point, we broke structure to this downside. Okay, violating these highs. These are higher lows at this point. So I would have been looking for this to price to take out this level as my break of structure. Okay, and then that happened pretty much fine. Okay, and we broke out of this level. So I am looking forward to price returning back to my ROTO, which is return to order block, before I begin to expect further bearish movement. It must not happen, which is the issue with confirmation trades. Most times there's too much volatility and they don't get to happen. But I am looking forward to it happening. And I have these two zones in mind. Now, the reason why I'm skeptical about this, but if it comes back, I'll be excited because I'll have a better risk to reward, is because number one, now this is the 15 minutes time frame. So it means on my 2-hour time frame, 1, 2, 3, 4 would be a single candle, or on my 4-hour time frame, the whole of this move here would be a single candle. And then it's possible that price, okay, price had mitigated that candle with that other block with this leg. Okay, it's possible that this high that I have here, let me just circle it out. Possible that this high might have mitigated this zone already, and we have seen further prices. Okay, it's possible. That is why price may not return there. However, if that is the case, then I will call this an actual transfer of fund from this candle right here to this. Okay, so I'll just view that as a transfer of fund from this candle right here to this candle. Or I can still call it from this candle to this candle, from this candle to this candle, because there's also a block inside of here on my lower time frame. Okay, but I want to work with what I have exactly here on the time frame that we have on our screen, so I don't get us too confused. Let me call this yellow. Okay, so it's possible transfer of funds from here to here and from here to here. Okay, now price has created an imbalance, number one, and has created liquidity that should be grabbed to cause further price movement to the downside. Okay, that is the case that has happened here. So there's a high possibility that price will come back up here to mitigate this level before we begin to see further moves to the downside. If this level fails to hold, then we are looking forward to this level, which is my primary point of interest, and this is my secondary point of interest. Okay, so We'll be watching to see how price reacts to this level before we engage price. Okay, and then if we look clearly, we've had lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and so on and so forth. Okay, we've had series of lower highs and series of lower lows, and so on and so forth. Somebody will want to ask a question. If you have this on your screen, please, this was the previous low, right? And this was the high. Now on this leg, wait a minute. On this leg, price failed to take out this low. Look at it here, it's still in the zone, it's still in the area of this low. So this does not serve as a lower low. Until price did this, then I had a lower low, and then this would have been my lower high. Okay, why? Because it did not take out this high. It is still in the confines of this high. Okay, so this is my lower high. So hence we've been having lower highs and lower lows. Okay, so before I approach this level, I want to see some sort of a break of structure of some sort. Which price failed to give me. I was hoping to get that at this point, but if you look clearly, price failed to give me that at this point. So certainly I do not have a new higher high, or a change of intent, or a change of character. I do not have that yet until I actually see one happen. Then I'll be looking forward to probably hedging this. Not actually hedging this, I'll be looking forward to taking price off this demand level, return to this demand level. I'll be looking forward to bias to the upside. Okay, and then when I get to the upside, I'll be selling from the upside in continuation of the trend. Okay, that would just, this leg, if this leg continues bullish to this point, it will only serve as a deep corrective wave to the area. Okay, why everything that has happened here inside of the structure are just shallow corrective waves and continuing the trend. Okay, so this here is our range structure because we have broken out of the initial range here to here rather. So this here plane here is range structure. So I'm looking out to see price continue back to this point, all these points, and then we take price to the downside. What was the idea? A reaction of a higher time frame supply block. And then when price reacted off the block, I looked to my left and I've seen that we have a clear stop purge, and I've seen that we have a clear break of market structure. What else am I looking at? A clear return to order block to now trigger me into the trade, and I will ride with the trend. Now, this is a risk to reward ratio. I have 4 pips here, approximately. Yeah, 4 pips here, approximately 4 pips here. And then my take profits for a sale is, I'm looking forward to taking price downward back here into this area, approximately 97 pips, or from what I have exactly in mind, 102 pips. Okay, so this should be so let's see this reward ratio. Let's see the risk reward ratio for this short step index. Let's call it 5 pips. Let's call it 5 pips, and then risk to reward on 1 to 18, or 1 to 18, 1 to 17, or 1 to 18. If we react off the first zone, if we fail to react off the first zone, we would react off the second zone. Okay, the same 5 pip stop loss. Okay, and then 1 to 20, or 1 to 20. Yeah, 1 to 20 or 1 to 21 for each of them. Okay, so this is a fine setup for me. It must not play out because price is price, but then I'll be sticking consistently to my setups. Whether it plays out or it doesn't play out, it doesn't change the validity of what has been created. Okay, that is what it means to work with the trading system. It must not always go exactly the way you say, but then have that at the back of your mind, and then just be flexible with price, maintaining what your system tells you to do, and then watching price play out. Okay, watching price play out on whatever price action it has hearing. Okay, so let's see this on the 4-hour time frame where I actually took this. Why I took this? The Euro CHF. I just have to point that out real quick. Okay, now I was expecting further prices to come into here and fill this zone. Okay, I remember sending that on the group to some of my guys And then they were not willing to take this level because they wanted this zone to be filled. However, range structure is still structure because after the structure, everything for me here was range structure. Okay, so I was trying to leverage off this imbalance, okay, that was not yet filled. And then this last candle, okay, I know I had my bullish candle that sponsored this one in my lower time frame inside of here. Okay, and then this double top had given me liquidity that price pairs into. Okay, so transfer of funds from here to this guy, transfer to this guy transfer to the next guy, and then we continue bearish. Okay, we continue bearish. So that's on smart money, manipulation, neutralization, and maybe you can add mitigation. Okay, manipulation, neutralization, and mitigation. So thank you very much, guys. I hope you have an amazing week. See you all some other time.